Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring during the week. The coming week may well see the imposition of capital controls in Greece. Should that occur, all eyes would turn to the ECB to see if it maintains open its ELA credit facility for Greek banks. It's against that backdrop that investors will be waiting on the release of a raft of economic data from the euro area, including the latest statistics on consumer prices due on Tuesday and manufacturing data on Wednesday. Greece upset the markets over the weekend as the Prime Minister shut down negotiations when he made a surprise announcement calling for a referendum on the bailout offered by the Eurogroup. The vote is scheduled on July 5th. The deadline for the Greek bailout is the last day of the month, while the IMF combined payment is due on June 30th. In a speech on national TV, Tsipras said his government had been asked to accept unbearable austerity measures. The Prime Minister said German Chancellor Merkel and ECB Chief Mario Draghi have been informed of the plan, and Greece will request an extension of Greece's existing bailout, due to end June 30th, by a few days to permit the vote without having to introduce capital controls in the Greek banks. The Greek government source said the country's banks will open on Monday and no capital controls are planned. Risk sentiment has been unstable for most of the week, mainly in reaction to renewed tensions related to Greece. When the traders grow tired with Greece this week, attention will focus on US jobs data, which is scheduled for a day earlier than usual due to a US holiday on Friday. Wednesday will see the monthly ADP jobs report ahead of the official release on Thursday. Analysts expect a 230,000 gain in June non-farm payrolls, with the unemployment rate falling back to 5.4%. Economists believe the labour market as a whole remained on a robust path of recovery in June. June non-farm payrolls are expected to rise by 230,000 after rising a strong 280,000 in May. Jobless claims edged lower to 267,000 in the reporting week, down from 273,000 in May, consistent with a solid payroll print and falling unemployment. Most forecasters will see September as the most likely month for a Fed rate hike, but some financial market measures for the most probable date for a move are giving contradictory signals. Fed funds features still indicate that a September Fed rate hike is unlikely, while the Treasury repo market is closer to pricing in such a move, with the probability currently standing at approximately 80%.